Hey everyone, it's Marin here. We got a special guest and a first time to the KRO. Now we've known of each other very, very long time. It's Warren Gilman, and Warren Gilman's before he became an investing legend, he was probably the main investment banker with his partner, who then, when they left CIBC, his partner went to run Tech Resources, and that's been a very, very successful company. And Warren then partnered up with Ka-shing, at the time one of the wealthiest Asian investors. So Warren, I want to introduce everyone to you. Thank you for doing this. It's the first time you've been in the KRO, but you're kind of the manager of the billionaires. You got a bunch of billionaires that have invested in you, like Ka-shing, Andrew Forrest, or shall we say Sir Andrew Forrest, known as Twiggy. He's the guy that broke the big duopoly in the iron ore in Australia. Talk about a great book called Twiggy for all the subscribers about his challenges and how you can go from zero to worth tens of billions of dollars, lose almost everything, and then make it all back within 20 years, right? And that's Twiggy's story, but it's all about knowing what you know, knowing what you don't know, but believing in yourself and achieving it. So Warren, before we get into why we're doing this call, what's your take with the gold markets right now? We're floating between that 1900 and 2000. You got Russia, trying to talk about they want to, destroy the petrodollar. And if you want natural gas, you got to buy it in rubles, creating a demand for their currency. But are you surprised that, record profits or record prices for gold aren't translating to higher share prices for the producers? Or is it what I call crossflation, where the higher gold price is being negated by the expected higher production costs and development costs?
Well, thanks, Marin. And first of all, thanks for that introduction. I can't go on air without thanking my supportive shareholders. It's an honor to have their trust and their capital, and it's long-term capital, and we'll be investing in the sector for decades. As I say, it's an honor to be in that position. Your question about gold specifically is bang on. The gold price itself has frankly been frustrating for the last couple of years, given the environment, which was and is the perfect storm for gold prices. You probably expect a little bit more excitement than what we've seen and what we currently have. Even more disappointing has been gold equities. Gold equities have underperformed the gold price. So as frustrating as it is, frankly, it's a great environment for people like me who are sitting on dry powder and are looking at places to put it. Other sectors, we all know commodity prices are running rampant. So prices of commodities generally, certainly LME traded commodities, are at, in some cases, record highs. Yeah. And opportunities are sort of running away with themselves. And within that is this gold sector that is offering up wonderful opportunity. So
discounts and NAV on built mines. It's like uranium 3-4 years ago. Remember?
Oh yes, I remember. We did very well in that, recognizing that. As a result, we're deploying capital in the sector. And don't be surprised if you see, my company, Queens Road Capital, making some investments, one of which we're talking about this morning. But we'll be deploying more capital in the sector.
So, I try to focus on, de-risking my investment, buying things cheap and get the upside for free. But one thing I've believed, Warren, for years and years and years, and my background's math, that political risk, the geopolitical risk, has been totally mispriced in our markets.
Of course.
And it makes sense because 85% of the money raised in the sector is not going to Nevada and Quebec. It's going to negative swap line nations and areas that the bankers are just interested in funding. And, it's like the old saying, God created gold, but the devil took it and spread it around, and he did it mischievously, right? So what is your opinion on that comment, and more importantly, from your very successful career? And you've been like me, you've traveled the world multiple times. Where your risk appetite in this market?
Yeah. Well, first of all, I learned the lesson from Mr. Lee, and you talk about protect the downside and keep exposure to the upside. And that's what we did. That's his style of investing. And that was, my predecessor company, CEF, that was our style. And that's translated directly into the business plan for Queens Road. That's what we do. And a key component of that is minimize geopolitical risk, stay in safe jurisdictions. Yes, there are some fabulous ore bodies out there in weird and wonderful places, but generally speaking, the valuation levels on those things, when you put a discount rate or 10 or 12% on a weird and wonderful country, on a mining project, which has its own set of risks, both implementation and commodity price volatility and so on, that's just insane. I mean, you are simply not being compensated for the risk. So stay in safe jurisdictions, stay with a great commodity in good quality ore bodies in safe jurisdictions. Talk about limiting your downside. That's limiting your downside 101.
Yeah, and thank you for saying that, because I know my subscribers have gotten so bored. It sells newsletters. The investors love that, like the movie Gold, where you're gonna, people have their day jobs and their family obligations and their personal life obligations, and reading about a newsletter writer riding a camel up this hill to get to this unforeseen gold deposit that's going to be the greatest thing in the world. There's no infrastructure, there's no roads, there's no rule of law. Hell, the two tribes across the river from each other are going to try to kill each other, and you're in the middle, and guess what? Those you're going to get stuck in the middle. So thank you for that, and I can't emphasize that enough. It's the alligator strategy. It's the boring way of investing, but it's the right way of investing. So you and I have now kind of been following someone for many, many years, and I think he's the Robert Friedland of my generation, and I've got literally tens of millions of dollars invested in this guy. So when I got the nose sent that, one of the best guys in the business is now buying stock, that told me that this is cheap, because I know what you are. The downside risk is limited, and he's going for the upside. So why is Warren Gilman buying Gold Royalty shares today?
And you've hit the nail on the head. Very well protected on the downside and tremendous upside. So as you mentioned, I personally have been buying. I'm on the board. So as a result, I have to report those. So it's out there for public disclosure. People can see how much I own and how much I've bought and have been buying in recent days. Queens Road Capital has been buying. Friends around the world have been buying, just saying this is an opportunity. So let's get in. If you were already in, add more. If you weren't, this is the perfect time. And probably a confluence of factors, Marin. The fundamentals are there. It's why I got involved with the company. Obviously, I've known Amir, and he's a great creator of value for shareholders for many years. The board, the advisory team, guys like Ian Telfer on the advisory board, Tim Young, great guys. But management, bringing on David Garofalo and John Griffiths, these are tremendous high quality guys. So fundamentals were there for the company in terms of foundation elements, management and foundation of assets. Valuation started to come back down, which provided us the opportunity. So our timing is great. Our fundamentals are there. What is the upside? We just talked about the gold price. So as far as I'm concerned, with the weakness in equities, shall we say, the disappointment in the gold price with a real weakness in equities, that has provided us with the opportunity. So now's the time to pull the trigger and realize that. And what is the upside? Well, the upside for Gold Royalty is growth. And every royalty company says that. Every gold royalty company, every base metal and oil and gas royalty, they all say, oh yeah, we'll bring you growth. We'll bring you growth. How do you get growth? It's a very competitive sector. There are lots of players out there, but your competitive strength in getting growth is your management team. And we've got the best guys on this. And you've seen that in what Gold Royalty has achieved in its very young life as a publicly traded company. It's grown from a very small company to $500 million plus market cap. I have every faith that this is going to be $1 billion market cap in the very few months ahead. And this is the opportunity to ride with that growth and have, as we discussed earlier, big exposure to upside with this team. Very, very little downside risk. We're protected on the downside, but this is the team to back to access that growth. So it's just a wonderful opportunity. And
so tell me if you would agree with this statement. And, you know, I'm drinking many bottles with Randy, who's the boss at Silver Wheaton. Me and Pierre would go for dinner. He was the founder of Franco-Nevada. I know the Sandstorm guys really well, Cisco Royalties really well. These are all good guys. None of them are like, these are all great people. But all of them say the sector needs consolidation. We need to consolidate. We need to consolidate. And then what's happened? You've had Mavericks get spun basically out of Pan American and a few other assets merging out. You had a Nomad, the team from Cisco Royalties. They left a couple of years ago and created Nomad, the two young guys, Joseph and Vince, young and aggressive. And there's been all these new companies coming out. And I don't want to go, you know, a royalty in a risky jurisdiction is still a royalty in a risky jurisdiction. And the second thing is, everybody talks about consolidation, and name me one company in the royalty space worldwide who's not only been more aggressive, but has actually said what they're going to do and then did it, but in the safest world-class tier one assets, the #1 mine in Canada. You know, you're looking at where's Malartic, and then they're in Nevada, right sandwiched between the two largest gold producers in the world. So would you agree with that statement? And that's what I keep trying to tell everyone, that yes, you know, the stock hasn't doubled or tripled like some of our others, but this is just true Warren Buffett value investing by de-risking ourselves.
Yeah, and you made a couple of points there that I agree with and should emphasize. Number one, talk about low risk and protecting your downside. You're looking at, you know, concentration of assets in places like, you know, Canadian Malartic, as you say, Canada's biggest gold mine. You're looking at Côté, which is, you know, between Sudbury and Timmins. You're looking at Ren in Nevada with Barrick as a partner. I mean, we're talking about the addresses for upside. So that's protecting us on the downside. And then you look at the opportunity, as you mentioned, you know, Silver Wheaton, Franco-Nevada, Cisco, as you say, they're all great guys. We all know them. We all love them. We all, you know, have a great
too many
time
bottles of wine
together.
with them.
Yeah, I mean, they're great guys. But our market cap is 500 million. We're going to go to $1 billion. Our market cap is not 20 billion trying to get to 40 billion. The key advantage that we have, and you mentioned consolidation as a theme, Gold Royalty, given the people that are behind it and our shareholder base, is incredibly liquid stock. I mean, this morning, you know, here we are, the day's just getting started. We've already traded $1 million US in volume. We trade regularly, you know, $2 or several million US in volume per day
And some of these
for
other
a company
companies
that
trade
has a
$50,000.
market cap of 500 million. We are in the sweet spot in terms of size. We're not trying to create another 20 billion of value in the next 2 years. We're trying to create another billion of value in the next 2 years, but from a base of an incredibly liquid stock, which no one else in this sector in our peer group can match. No one.
And the other thing is, it's gotten so cheap that if I was a Triple Flag or a Cisco, I'd be looking at going, I wonder if I can take them out. That's something else for investors to think about, because you can't replicate this portfolio. You just can't.
Well,
right?
You get to the point where liquidity in itself is an asset.
Yeah.
And people are going to say, how do we get liquidity? Well, we can do the hard slog of getting brokers. We can court the brokers, get research, try to get trading, and it's a hard slog. You eventually get there in bits and pieces. Or why don't I just buy liquidity by taking over someone who is already incredibly liquid, and then I'm naturally liquid myself.
That's and a great pipeline of assets with huge growth.
Yeah, but that's. I mean, we don't want to be doing this. We want to build a lot of value before we get there. But there's no question that liquidity becomes a sought after asset in this market.
Well, Warren, I do look forward to the day when me and you finally structure something together. It'll be a lot of fun. It would be a great meeting to see how the two of us on one side versus the management teams on the other, but we'll get there one day. Thank you for doing this, and stay healthy. And then I hope your success continues. It's been fantastic watching what you're doing.
Well, I appreciate that, Marin. I look forward to it as well. And, you and I are not here to tell people what to do. We're just sharing our experiences and just
what we're doing with our money. Yep.
Don't do what I say. Just look at what I'm doing and then make your own decisions. I've told you what I'm doing, so there it is.
Excellent. Thank you so much, and stay well.